Hi friends, so far we learned about different type of orders like normal order, stop loss order and robo order in stock market. If you have not seen those videos, I have put all those videos into a playlist and given the link on I button. Click on the I button to watch those videos. I am sure those videos will help you to understand the stock market better. So in today's video, we will learn about the different products type. Many of you have already asked me this question, what is the difference between delivery order and intraday order? Some of you also had this doubt on how to do a margin order. Please watch this video to understand each of these type of orders in detail. At the end of this video, I have also given a bonus tip on how to make profit through intraday trading. So let's begin today's video. Welcome you all to another interesting episode of VishLence. Let's begin with delivery order type. When conducting transactions in the stock market, you can either perform intraday trades, delivery trades, or margin trades. When we trade shares under delivery, an actual exchange of shares that happens between the traders. You are actually buying the shares in exchange of cash from a seller. In delivery type order, the actual shares get transferred from the seller's demat account to the buyer's demat account. The money transferred from buyer's trading account to seller's trading account. Shares get credited to buyer's demat account on the second day after trading. We call it as T+2 day. You can sell shares through delivery only if you are holding the shares in your demat account. Which also means that in order to sell your shares under delivery, you need to purchase the shares at least 2 days before. In delivery order type, shares are allowed to be kept in your demat account as long as you wish. You can sell them when the market gives you a profit. In this chart, you can see the price of a share from May to October. The price of that particular share is increasing over the time. If you are making a purchase order in the month of May at around 1000 rupees, you can sell the shares anytime when you think you can make profit. Here, you can sell the share anytime from June to October as the price increased already. However, in this case, you can see the price of the shares dropped after you buying it. You don't need to sell your shares at loss. You can hold your shares for few days, few weeks, few months, or even few years till the market gives you profit. You can sell the shares when the price is above your purchased price. In delivery type order, you need to pay the total transaction value upfront during the transactions. Which means if you have 10,000 rupees in your account, then you can buy shares worth 10,000 rupees only. In delivery order type, you receive the actual shares in your demat account. That officially makes you one of the owner of that company. Means now you are eligible for dividend, bonus and other company benefit like any other owners. Now let us understand how intraday orders differ from delivery orders. Intraday trades, as the name suggests, it's a trading style with a validity until the same day. This means if you buy shares in intraday, that needs to be sold on the same day before the market close. You cannot save intraday stocks in your demat account. If you're trading in intraday, there is no actual exchange of shares that happens. It's only a financial book adjustment of the trades that you make. All your intraday trades need to be squared off before 3:15 p.m. same day. Remember, before 3:15 p.m. all your purchase orders and your sold orders of shares under intraday order type need to be equal. There is no shares that will get saved into your demat account under intraday order type. Square off means the total quantity of shares that you're holding in intraday trading should be 0 by 3:15 p.m. If not, the broker will automatically adjust the trades at market price on your behalf to make it 0. Remember, the total intraday buy need to be equal to total intraday sell before 3:15 p.m. every day. Because you don't receive the actual shares in your demat account, you are not eligible for dividend, bonus, and any other company benefits like honors. Yet, intraday trading is one of the most popular trading method among investors. There are a few benefits in intraday trading. The first benefit in intraday trading is that the broker allows a margin for trading, which means you can do a transaction up to a trade value equal to 15 times of the fund that you are holding. For example, if you are having 10,000 rupees cash in your trade account, in delivery order, you can do a trade worth value 10,000 only. However, in intraday trading, you can do a trade worth 1,50,000, which is 15 times more than the fund that you're holding. Another exclusive benefit in intraday is that you can short sell the shares. This means if you feel the market prices are going down, then you can sell the shares first, then buy them when the price drops. Remember, in delivery order, to sell the shares, you need to purchase them first. However, in intraday order type, you can sell the shares first and purchase them later. If you think that market is going up and the price of the shares are increasing, then you can buy the shares and sell them later. And if the market is collapsing, you can sell the shares first and buy them later when the price decreases. So let's understand the difference between delivery and intraday trading. First, there is no validity for the shares that you purchased through delivery. In intraday, those shares are only valid for the day. The second difference is that under delivery order type, the shares are getting delivered to buyer's account, and buyer can keep the shares as long as they want in their demat account. As actual shares are delivered to the buyers, the buyer officially becomes one of the owner of that company and can enjoy the dividend, bonus, and other benefit like any other owner of that company. However, in intraday, you cannot keep the shares with you. You have to square off your intraday trading before the market closes. If not, broker will square off the shares and there will be an additional charge that applies to you. Also, you won't get any dividend, bonus, or other owner benefit as you don't receive the actual shares. The other difference in delivery is that trade value needs to be paid upfront. There is no margin available for trades under delivery. In other words, you can do trade equivalent to the cash available in your accounts. Wherein intraday, the broker gives you a margin up to 15 times, which helps you to trade for large quantities. Means if you have rupees 10,000 in your fund balance, you can still do a trade worth 1,50,000. Fourth difference is that you have to buy the shares and wait for minimum 2 days to sell it under delivery trading method. But in intraday, you can sell the shares first and then buy later when the price drops. If market is bullish, you may buy the shares and sell it later. In delivery trade method, you don't need to watch the market movements very closely as you can decide whenever you want to sell it off. But in intraday, you have to watch the market very closely as your profit and loss is depend on the price of the share on that particular day only. And in the last, delivery is the safest method of trading. Profit depends on the capital investment that you make in delivery orders. Wherein intraday is highly risky trade but can have huge profit or huge losses. This is one of the most preferred method among the investors. Let's now try to understand what is a margin order. Margin trading means you are actually taking a loan from the broker to carry out your trade. Margin trades are similar to delivery trades except for the fact that in delivery, you have to pay the entire trade value money from your account, while in margin, you need to pay around 20 to 30% of the trade value. Rest amount will be paid by the broker on your behalf. However, like any other loans, there would also be an interest that will be charged to you by the broker. The rate of interest is around 18% across all the brokers. It is not recommended to carry out the trades in margin type orders. To understand the margin order a little bit more in detail, let's see an example. Suppose you have 10,000 rupees in your account and you need to buy 500 shares of a company ABC. The market price of the share ABC is 100 rupees. So you can't take a delivery of order as you don't have full transaction value in this case. The full transaction value of this trade would be around 50,000. So you can choose margin order type and buy the shares. Here 10,000 will be paid from your account and the balance 40,000 will be paid by the broker. Now the broker will charge you 18% interest on 40,000 that you borrowed. You have to pay back this money as early as possible to reduce the interest. As promised you earlier, now let's see some of the successful tips for intraday profit making. Experts often recommend individuals to avoid trading during the first hour once the market is open. Taking position between noon and 1 p.m. can increase the possibility of earning profits. Determine the entry and exit price before initiating the intraday trade. One of the most important intraday trading tip is to use the stop loss trigger. We have learned what is a stop loss order is. So please use stop loss order or robo order to carry out your intraday trading. Moreover, once the stock achieves the target price, users are advised to close their position and not to be greedy and expect higher profits. Start investing with a smaller amount. Go with market or industry trends. Choose an account for which demand is impacted. Any companies which get affected from the current affairs are selected for intraday trading. Apply pivot points to understand the support and resistance range for share price. Understand SMA or simple moving average strategy and apply it. We will soon do a video to understand simple moving average strategy very well. I hope the videos that we did so far helping you to understand the stock market trading quickly and easily. I have given the link to the playlist of all those videos on the I button. If you have any questions, comments or feedback, please do not hesitate to share them. Also, don't forget to subscribe the channel and click on the bell button to get update on my new videos. Please continue to support me. Your support is the encouragement for me to do more videos. Together we will learn and earn money from the stock market. See you in the next video. Till then, it's Vishnu signing off.